Hey everyone, thanks for jumping on to our bi-weekly RWA space. I'm Jackson Blau, our Director of Business Development at Infineo, and we've got a super exciting space plan for you today. We've got some real experts from the crypto market that are going to be helping us unfold the story of RWAs in crypto right now and what we can expect to see in Q4. And so with that, we've got Advantage Blockchain on today. We've got their founders, Mark and Alec, on with us. And we're very, very excited to dive into the conversation today. We're also joined by some of the Infineo team. And so before we dive in here, I'd love for everyone to introduce themselves to the listeners. If we could potentially start with our guests, Alec or Mark, it'd be great if one of you would want to start with an introduction and tell us a little bit about what does as well, please.
Yeah, thank you, Jackson. Excited to be here. Mark Paquin, CEO and co-founder of Advantage Blockchain. We are a blockchain education, research, and investing organization. So we essentially, try to teach the world about what this crazy blockchain technology is and all of its very amazing and fascinating use cases. And then we also invest in it and try to, help the world gain value.
Just as well, please.
Yeah, thank you, Jackson. Excited to be here. Mark Paquin, CEO and co-founder of Advantage Blockchain. We are a blockchain education, research, and investing organization. So we essentially, try to teach the world about what this crazy blockchain technology is and all of its very amazing and fascinating use cases. And then we also invest in it and try to, help the world gain value.
Thanks, Mark. And thanks, Jackson and the Infineo team for having me back. Great to be back. Always exciting being here. But yeah, I am the president and co-founder of Advantage Blockchain. And super excited to be here.
Incredible, guys. And for those of you that aren't keeping up with Advantage Blockchain's research, I highly suggest you do. It's one of my favorite newsletters and reports I get each week. So highly suggest you do that. And we're joined from the Infineo team by our Chief Information Security Officer and our Chief Economist, Tony and Bob. Do you guys want to introduce yourselves?
Yeah, CISO here at Infineo. And again, great to have Alec and Advantage Blockchain back. It's been a while, I think, since we've spoken, and looking forward to catching up and hearing what's going on in that world.
Yep, thanks, Tony. This is Bob Murphy, the Chief Economist at Infineo. So again, folks, for those who are new, we're here at Infineo, we're putting life insurance on the blockchain. So we're very interested in the concept of RWA, or real world assets, and always good. Alec is somebody that I've learned a lot from in the past on this, and just looking forward to the conversation.
Perfect. And with that, I think that we can dive into today's conversation. I really just want to start pretty broad and talk about the rise of real world assets in crypto. Alec and Mark, if you guys discuss a little bit about what you've seen in recent trends in terms of tokenizing physical assets, how does that really play into what you guys have seen in terms of the growing bull market that we're starting to see in the crypto industry as well?
Sure, I'll start here. So I think, obviously the entire blockchain market, including crypto, including RWAs, is growing at a pretty rapid rate. I would look towards the best use case and the most used use case today of digital assets, which is really the collateralization side, the borrowing and lending. And so far, we've seen that done with a lot of these liquid crypto assets, and that's really what we've been focused on. But what we're seeing a lot of is these platforms on both the decentralized and the centralized side, using some of the infrastructure that's been built for collateralization and applying that to real world assets. So we've seen a lot of this occur in the treasuries and more fixed income market. I think that we'll see a lot of private credit move on chain, repos move on chain, and other real world assets. And we'll probably get more complicated, as closer to real estate. I know obviously life insurance, specifically whole life, which is what Infineo is focused on, is a really great use case and something that we're excited to see. So it's very much on our radar, and I can pass it off to Mark about, kind of the way that we're looking at it and some of our sentiment within the fund.
Yeah, thank you, Alec. Can you guys hear me?
Yeah, we can hear you perfect.
Okay, great. Yeah, thank you, Alec, and well said. I think from my perspective, as a portfolio manager, right, we're really excited about the investability of all of these new products and these new assets. I think the RWAs is an interesting segment of the market where it's like there's a tremendous amount of just wealth in general, but that also comes with more traditional kind of guidelines and parameters to how that can be moved and controlled and invested in. So naturally, that whole segment, the RWA just market segment, has been harder to invest in than say altcoins, gaming coins, meme coins, or even other scientific coins, right? With DeSci, a lot of different projects are much easier to invest in, right? So I'm excited. I know it's been a long time coming with all of the infrastructure rails being built, with Infineo being one of the awesome organizations who's doing that building. But really, we're excited to actually be able to invest in these things as people who talk to retail, as people who talk to our RIAs, and institutions. I think that is we're likely 2025 is going to be bullish for a lot of reasons, but hopefully we're starting to move towards actually being able to invest and yield and ultimately have masses gain value from investing in these products.
That makes a ton of sense to me. Dr. Murphy, did you have a follow-up there?
Yeah, I just want, this is going to be real basic, but just maybe to frame the discussion at the outset, and I know we have people trickling in here who might be novices. Alec or Mark, can you just explain the terminology that's used in this space now? Specifically, I'm wondering, like, the difference between, to say something as on a blockchain versus crypto versus real-world assets. Let me just start. So the way I've been using the terminology is a cryptocurrency is not pointing to something else. It's traded via a blockchain. That's how you transfer ownership of these abstract things. Like, what does it mean to own a Satoshi? It doesn't. Whereas to say, oh, I own a piece of real estate, but it's tokenized, it's a real world asset. So that also, there's like a digital token that's on a blockchain somewhere, but that's pointing to the actual physical thing in the physical world. So can you just maybe speak just as to how people in this space use that terminology and make those distinctions?
Yeah. I mean, I can start by saying, preface, it's complicated, right? We're mixing computer science with, economics, right? It's not a simple subject to understand, but I would say from my experience, right, crypto is just referring to the native cryptography being used behind the assets, right? And when we're talking about digital assets, right, we're not talking about your V-Bucks on Fortnite, like the institutions are referring to, cryptographically backed assets that are built on blockchain as digital assets. So it's we're in a weird time period where the nomenclature is not really set. People are using different things for kind of the same thing. I think that if you're talking about a cryptocurrency specifically, because it's so commonly used, if you really want to drill into it, a cryptocurrency is reflecting a currency that is cryptographically backed and on-chain, right? So many different organizations online or different products can utilize a currency within their ecosystem for a lot of different features. I think versus if you have a real world asset or a photograph or a barrel of whiskey, right? You can make a token, right? Which is like you can call it a token, you can call it a unit. You can make just a unit of that on chain, right? So you can still have that unit be in a system that's cryptographically backed and representative of whatever it is. I think is it a currency? Well, if people start using barrels of whiskey or photographs and NFTs as currency, then maybe you could call it that. But I think the real thing is all of these things are pointing to the blockchain, right? They're all built on chain, and that is being on the blockchain is what enables this this newfound decentralization and transactability in a kind of new revolutionary way.
Yeah, I would also add that just in terms of how people are using the language, I would refer to cryptocurrencies as the more liquid investments that have become super popular since Bitcoin was founded and really since 2017 when things really started to catch the public's eye. So I would refer to Bitcoin, Ethereum, any altcoins, anything in the DeFi space as cryptocurrency, while real world assets are directly pointed towards, as the name speaks to, an asset that is on chain, as Mark mentioned, that is backed by something. In this case, whether it's a insurance policy or a real estate property or a treasury or something that people would invest in a traditional way, but just adding an on-chain element to it. And then I would also add a third category, which would be stable coins. Not necessarily a real world asset in the way that I just described it, not necessarily a liquid cryptocurrency, but it is a totally different thing in its own third bucket that is tied to the value of something. In most cases, a dollar or a different fiat currency, but really used as a settlement layer for blockchain transactions, which can bridge things like cryptocurrencies and real world assets.
That's incredible, guys. And with such a complex topic, I think you guys really answered that incredibly well. It actually is going to change how I ask the next question. I really kind of wanted to hear what you guys have been seeing as Q3 comes to a close and we start looking on to Q4. I was going to ask what you guys have been seeing in the crypto markets, but I think that's a little too specific given what we just spoke about. So I really am interested in your outlook on digital assets and more specifically, what you guys have seen in terms of market performance. And if you could just touch on potentially where you guys are looking with your portfolio. I know that you guys have been big Ethereum fans for a while. And is that still the case?
Yeah, that's definitely still the case, Jackson. And, I think I can keep it short and sweet. I mean, the biggest news in the industry since inception is probably BlackRock going forward with their ETFs on both Ethereum and Bitcoin, right? Bitcoin was earlier this year and ETH was just a few months ago. And we're seeing, insane amounts of inflows, right? This is the largest asset manager in the world, essentially giving the green light to move the world's capital into this asset class. So with that, with so much money being on Ethereum, right? Bitcoin may be more of that traditional cryptocurrency that we think of as its use case and utility is really as like a currency that anyone around the world can use, right? Whereas Ethereum is a bit different, right? We view it more as like a base layer of the App Store, right? Almost like the Apple App Store, but in a decentralized manner for people to create decentralized applications. And instead of all the money and revenue going to Apple, one entity, it's going to the holders of ETH. So that enables people to build all different kinds of applications, like what infineo is building and so much more. So I mean, I'm really excited for all of the infrastructure building that's happening on Ethereum. And again, as a portfolio manager, I'm looking at it, me specifically, right? I value the education side of things, and I think that's super awesome to talk about as well. But I know a lot of other people are specifically excited about looking at this from an investment perspective. Can I put 100 units of capital into this and return 150? So finding which of those projects exist and are around and are being built, that's very exciting to us.
Yeah, I would also add, and thanks, Mark. I would add what I'm seeing kind of on the institutional side, and Mark touched on it with what BlackRock's doing it, but BlackRock is far from the only large asset manager and large institution that's getting involved in the space. You're seeing, various banks. You're seeing Goldman Sachs, Morgan Stanley, JP Morgan, and all these different banks that are building infrastructure around, both investing in digital assets, but also in tokenizing real world assets, which is very exciting. You're seeing for the first time these big banks and these big brokerage houses like Fidelity, Van Eck, and some of the other players actually offering digital assets, whether it's through the form of crypto or other real world assets to their clients, which is very exciting. That's trillions of dollars being able to pour into space, which is incredible because to date you've really only seen retail investors drive this market. You also see things like governments starting to get involved. For the first time, you had 3 pension funds. One was the Jersey City Municipal Pension Fund, and then there was also the Wisconsin State and Michigan State actually invested in Bitcoin, which is really cool. And that is an insane thing. Not to mention the fact that now the Kingdom of Bhutan has come out and said that 1/3 of their GDP is in Bitcoin. Plus, obviously, what El Salvador has been building for a while. I'm hearing rumors of India buying Bitcoin. So big institutions, countries, governments actually starting to take the digital asset space very seriously. And then on the infrastructure side, you see these players that have been around for a long time, such as Wisdom Tree, KKR, Hamilton Lane, Visa, like all the, whether it's private equity, whether it's asset management, whether it's, financial transactions, you're seeing all of these different institutions actually building in the space, creating tokenization platforms, creating ways for banks to utilize blockchain technology for settlement. It's very exciting and really could revolutionize the financial industry as a whole, as we've been predicting since, Mark and I got into the space in late 2015, early 2016.
I love that. And you guys are right on the money there. And we've had you guys over and we've discussed a lot about your guys' investment strategies. And just for those that may have not been there, on the last space through our conversations, you guys follow where the builders are. And I personally really agree with that strategy. Everything is going to happen where there's development. Within the Bitcoin and Ethereum ecosystems, are there any key trends outside of RWAs where you guys are seeing a lot of development? I also know that you guys have been seeing a lot of men on base and have been keeping up with that as well, if that is something worth mentioning.
Yep, you already knew where I was going to go, Jackson. That's absolutely. We're very strongly looking into L2s, which is in short layer 2s, just the biggest scalability solution for eventually blockchain, right? For Ethereum, but Ethereum being the biggest developer blockchain, we can just call it for blockchain as a whole, right? So layer 2 is a big trend, and that's just scalability. That means more people can now use all of these different applications. So then what are people doing on top of that? Well, I mean, in my experience, the money has always started at exchanges, right? I mean, exchanges is the clear utility that, you get on chain, even from back in 2015, you put some ETH on chain, right? And what do you do with it? If you want any of these other cool applications, well, then you have to exchange it, right? You have to exchange your ETH for something else. So Base, right? I mean, this is probably a big part of why Coinbase is the most successful crypto company in the US. Right? They are an exchange, and they've made clear that they're working on basically revolutionizing their own exchange and moving it onto Base, their layer 2. So, we were pretty deep invested and still are into Optimism, which is a kind of a more technical, actual ground layer solution to the scaling and to building the layer 2s. But then on Base, which is growing to be one of the biggest layer 2s, the biggest pockets of wealth on the Ethereum network. We're really liking their decentralized exchanges, right? So Aerodrome is a big one that we're watching. And I actually was thinking about this from a perspective of Infineo. I think to start, this DEX is right now, it's doing, billions of dollars in volume on different cryptocurrencies, right? These liquid products and different altcoins and whatnot. But I very strongly believe that in the future, I mean, the world is using Coinbase for the most part as a custodian to all of its assets, right? I would think that they would be, somewhat incentivized to at least believe in their own products, right? And move some of that money into their own products and into their own ecosystem. And the exchanges, right, I believe are going to, and it would be nice to see if not only in the future they offer, the ability to access crypto and, just general tokens, but some of these real world asset products. If I could go onto Aerodrome, which is, one of our biggest positions right now, which is that DEX, and not only find different coins, but I could find, a list of different life insurance products that I could invest in and show their potential yield, or a list of buildings in China and, Africa that I could invest in and earn a fractionalized piece of these contracts or assets. I think that's super interesting. And I mean, that's the usability, right? It's like to actually have all these products be liquid and accessible to the rest of the world, there needs to be an exchange that's easy to use. So that is one thing that we've been very focused on is kind of following the biggest exchanges and watching them develop and unfold.
Yeah, I would also touch on what I'm seeing in the real world asset space. So I love that Mark touched on the decentralized applications that can be built eventually for real world assets, being able to go on something like Aerodrome or a decentralized exchange or a decentralized really liquidity creator, I would call it. But what we're seeing right now is really a lot of infrastructure on the centralized side. So I look at platforms like Centrifuge, like Maple Finance, like Credit Coop, who are developing platforms or who have been using platforms that they've already developed to actually create a lending, a real way to lend against and borrow against real world assets like treasuries, in some cases stable coins, in some cases cryptocurrencies. A lot of them have been focused on the fixed income side, but you're seeing a lot of these different platforms pop up and really start to have incredible volume and incredible, total value locked. And it's very exciting to see a lot of these assets move on chain.
I completely agree, Alec. And with that, are there any other RWA projects that you guys are super excited about potentially investing in? I know you mentioned Aerodrome. being a DEX. But are you guys making any investments directly into RWA projects? And I should probably preface this by saying on these spaces, we're never giving financial advice. We're just talking about the markets.
Yeah, of course, not financial advice. This is all, educational and informative. That's actually kind of a question I have for you guys. Maybe Tony or Robert can speak on this from their perspectives. But I'm curious to know. I mean, what is being built that could be investable, in the future, maybe in the next 1 to 2 years, from that perspective of portfolio managers around the world who may already some of these products traditionally, but now that they're going to be, or that this tech is enabling them to do that in a different way. Who are some of those first movers that you guys are seeing, that Infineo is seeing, if any?
So, at least in my opinion, it would be really great to see portfolio managers like yourself potentially start looking at projects like Realty. Really, I think they're the best example of what a portfolio manager could do in the space right now. Given it's not available to U.S. investors right now, per my understanding. But what Realty has done is created an ecosystem of tokenized real estate. They really specialize in finding distressed properties, bring them and renting those out. They do the management, and you can invest in their tokens completely on chain. They have a really built out ecosystem, so you're not stuck into owning those tokens, which are less liquid than cryptocurrencies, as we discussed earlier. But they've actually built out, I believe it's called the RMM, where you can leverage your tokens and actually take out loans against them, which I feel like could be a very valuable tool as a portfolio manager. And we've seen a lot of development in the tokenized real estate space. I just really personally think Realty is the furthest along, and they've been my favorite for a while, so I might be a little biased. Dr. Murphy or Tony, I don't know if you guys have any thoughts on that.
Well, sure. Let me just talk our book up. So what we're doing in Infineo, in this genre of what we're talking about is the down token is the thing that comes to mind. So I'll just give the quick elevator pitch on what that is. So we're acquiring a bunch of whole life insurance policies that have certain characteristics, a threshold of the internal rate of return on the cash value. We're putting them into a big pool, and then we're going to issue digital tokens that are fractional claims on the aggregate cash surrender value of that pool of whole life policies, and we call it the sound token. If you go to our website, infineo.ai, you can see little explainer videos and things like that if you want to learn more. And the point of it is it's giving access to life insurance as an asset class. It's sort of a niche thing right now where a lot of people are doing this with conventional analog policies, but there are some frictions. Like, for one thing, just to take out a life insurance policy, it's not like going and buying a bond or something. You got to prove insurable interest, and if the policy is big enough, you got to have your blood taken and go fill a cup up and so forth. So it's not the conventional way to get into exposure to an asset class. And so we're kind of sidestepping all that. So that's part of when people say, what's the point of using the blockchain and all this stuff? And is that just buzzwords? In our case, we can make a very compelling argument to show why, no, this is really the way to bring access to this. And then once those building blocks are up and running, or just more generally, once we have what we call a BNFT, a backed non-fungible token that points to a specific policy, then portfolio managers can mix and match and build, whatever kind of structured product they want, with that as the underlying building blocks to give all different types of exposure depending on your risk tolerance and so forth. So that's what we're doing just in the space of life insurance that I think is opening that wide open, that as you're going to see a lot of activity starting next year.
Completely agree, Dr. Murphy. And I'm happy you brought it up because that would have been too easy for me. Obviously, that's the first that come on. But yes, I am a big Realty fanboy. Alec,
Jack,
you got something to add there?
Yeah, I was just thinking, kind of as you're talking about Realty, and I'm familiar with Infineo and Sound Token and the idea of, I guess, infinite banking. And so it sounds like what a lot of the real world asset industry will allow for is more of an infinite banking approach to finances. So the idea is you take a whole life policy, which has a pretty stable return, cash value that you can borrow against. And that's what a lot of people use as a personal finance tool to actually go out and invest in other assets while having some protection around, really a principal and what you're holding. If I can invest in different things like a real estate asset or other assets where I typically wouldn't borrow against the value of my asset with traditional finance methods, but could with things like decentralized finance and some of the platforms that we're seeing being built, I mean, that could be really powerful and could open up the idea of infinite banking to more assets outside of whole life. And, Bob, I'd love to kind of turn it back to you and see if you have any thoughts there, because obviously you're, probably the number one economist in the whole life and insurance economics game. So does that sound like something that makes sense, or are there advantages around whole life that make it, kind of, or give it a level of non-compete that other assets wouldn't be able to handle?
Sure. So great question. And let me say, I think I understand what you're asking me, and I'll say this, and if I'm answering a different question, you can push back. So yeah, originally, if you listen to like Cole Snell, who's the founder and CEO of Infineo, folks, when he explained his vision, the idea was he was originally using a portfolio of whole life insurance policies that he had on himself, and other people that he had insurable interest in, and he was using that as like a cash management vehicle based on the principles that he read about people like me and other. Nelson Nash, of course, was the originator of the infinite banking concept. And then, but then Cole on the side was also big into Bitcoin at that period in his life, and he's doing things like staking and so forth. And he realized, oh, wait a minute, this is kind of an old school way of doing it and a new way of doing things. And so, yes, in terms of the underlying principle of you have an asset that's got some market value, you want to be able to move money around based on its market value, but you don't want to renounce ownership of it. So yeah, that's pretty standard. And with the whole life historically, the reason they were so convenient is there was a built-in clause saying that the life insurance company had to lend to you with your cash surrender value as the underlying collateral. And so that's why, just in general, whole life insurance was such a good set to be practicing, quote, infinite banking upon. Whereas in principle, you could use your house. You could just go to a local bank and say, hey, I got $300,000 in equity. My daughter's getting married. Give me a home equity loan, against my house as the collateral. But they're going to run your credit. They're going to see what your sources of income are and so on, because the fundamental difference is if you didn't pay off that loan, the bank was going to have to ultimately have the cops kick you out of your house and sell it and then pay themselves the loan back. Whereas with life insurance, the carrier themselves are guaranteeing the collateral. So I think that still carries through in general, to what you're saying, Alec, as to why even in the digital world of digital tokens pointing to these real world assets, I would argue life insurance has an edge in that sense in terms of the underlying liquidity is basically the way to summarize it. So the last thing I'll say, just to drive for the listeners, the reason we think the sound token, for example, is a better fixed income alternative for a lot of portfolio managers than even like a bond fund, like even tokens that are backed up 100% by treasuries, is we think that the default risk is virtually zero in both cases, in the short term. But then beyond that, a treasury fund has interest rate risk, right? So if interest rates rise, the value of your pool of treasuries falls, the market value. Look, that's what happened to Silicon Valley Bank. It's not like they had a bunch of real risky, crazy loans on their books. No, they were sitting on treasuries, but they got hit hard because when interest rates spiked, the value of those dropped. Whereas with life insurance, that can't happen, right? Because you can always there's a floor, you can just surrender the policy back. So if you want to think of it, some people are like, oh, so it's kind of like mortgage-backed securities, and that scares people. But I want to say, yeah, it's like a mortgage-backed security, except if, or a REIT, let's say, a pool of real estate where the builder of the house has a schedule of, oh, at any given time in the future, we'll buy this house back from you. Because that's really what a whole life policy is, that it's a thing you're putting money into it, and then the carrier at any given time says, we will buy this back from you for this price. And then that announced redemption price goes up over time contractually. So I think that's my long-winded way, Alec, of saying, yes, there are similarities, but there's a reason we're so excited about life insurance per se as an asset class. We think it has some characteristics that make it really ideal for people who want something that marches up steadily over time, but yet even in a crisis, that thing's going to retain its basic value and it's not going to, drop because there's a liquidity crunch.
I have a question. Unless Alec, did you have something to add to that?
No, I was just going to say, thanks, Paul. That was awesome.
Yeah, I have a question just as an educator, and I think this might be helpful to just clarify some terms. And even for me, I'm probably the least educated on Infineo specifically. And I understand that these are very complex subjects. Maybe you guys could just summarize, but, just to be, start from square one, right? Why is it called infinite banking? Where does that term kind of come from? I'm guessing, Infineo has something to do with that, why you guys are called Infineo. And also, why did you name it the sound token? I think understanding all of those would be helpful.
Yeah, sure thing. So one thing is because infinite banking sounds cooler than finite banking. No, the reason is Nelson Nash is the guy who coined that phrase. He was in life insurance himself, and as he tells the story, in the early 1980s, he got into some issues financially. He had been speculating in real estate and whatever, but borrowing money and then flipping houses and whatnot. Got caught when interest rates spiked, and he had this epiphany about, oh, wait a minute, I've got everything I need right in front of me. I've got these whole life insurances that can, in a sense, function as a bank. And he just meant that, metaphorically, that in terms of managing cash flow, just like what's a food bank? It's where, food comes in and out, and it's a storage place, right? Or a snow bank or whatever. That's the sense of what he's using the term to say that you can use these whole life policies as a place to let your capital reside before you deploy it somewhere. And then again, because of its characteristics that we don't need to get into here, it's a very convenient place to do so. And yeah, he just came with infinite banking. The reason he called it that is just his point was the possibilities are limitless. Like once you open your mind to realizing how you can use these things, you can, if your daughter needs to go to college, if you want to buy a new car, if you want to fund a business, these things just borrow against your budget. So that's where that comes from. That's what it means. And then yes, the infineo, there was not a lot of neat attributes to that word, but yes, it's partly the play on infinite banking. Also, there's like the DeFi and then InFi kind of stuff, and then also just the Neo, like the Matrix kind of thing. So there's lots of reasons that when we hit on infineo, that everyone thought, yeah, that's a great name for the company, given what we're doing.
I love that. And the sound token?
Sorry. So yeah, sound token is, when I was in the infinite banking space, I wrote some books with this guy, Carlos Lara, and one of the ways we came up with stressing, what it is that we're doing here in the Austrian School of Economics, and the idea of sound money. And so the idea of, like, historically it was like gold or the dollar when it was backed up by gold, or that was a sounder framework than just the fiat government currency. And so this idea of sound money has been in the Austrian tradition for a long time. And so because of our stress there, and Carlos had articles on the sound money solution and things like that, and it involved, as an interim step, people switching over, like not using Wall Street and investment banking and so forth, and trying to switch their capital into the life insurance sector as being much more stable and sound. And so then because of that, sort of the nod to that and homage, and it's the sound token, we're saying this is very dependable, that this thing is, that the assets backing it up are liquid and good, right? You rush that, no, we could, in principle, if everybody wants their sound tokens back, we could just turn these things back into the carrier. Whereas lots of other assets, again, even if you're sitting on a bunch of treasuries, no, if there's a crisis and interest rates spike, then the market value of your treasuries can plummet. And so, people can't just liquidate and get their money back, even for something, quote, as risk-free as treasuries in certain scenarios. Whereas again, these things, contractually, the carrier has to buy them back, for the cash surrender value. And that's what is the NAV of the sound token is based on, is that cash surrender value. So that's the sense in which we're saying these days sound.
Got it. And Robert, is there a way to estimate the size of the infinite banking industry? Because I think to the narrative that Infineo is bringing infinite banking on chain, I think that's very bullish, and I think that's digestible.
So it depends. There's different ways. With one data point, just to give you an idea of the size of the thing that we're trying to jump into, there is over $140 billion annually of payouts that the U.S. life carriers make to people surrendering their permanent life insurance policies. And so we just intercept even a fraction of that, flowing, that when people are getting ready to surrender, we say, whoa, don't do that. Why don't you instead, transfer it to us, basically, and we'll give you a better deal. And then that'll go into the pool that starts backing up more and more sound tokens. So that's just to give you one idea. The people interested in, let me put it this way, there's lots of people who own a whole life policy who don't know what infinite banking means. Okay. But the world of infinite banking, of life insurance producers who use that explicit terminology, is growing. Off the top of my head, I can't tell you, what the market share is, but more and more people are learning of the benefits of using life insurance as a cash management vehicle. And that is what infinite banking is. So some people might be doing it, not using that terminology. But again, just to give you a size of the overall market, again, there's 100 billion plus paid to people turning in their whole life policies every year.
Got it. That's super helpful. Thank you.
100%. And to come back to kind of that point that we were talking about real world assets almost being infinite banking on chain. Even directly, Infineo is bringing infinite banking on chain. I completely understand what you guys are getting at in terms of having an asset and leveraging that and using that to do other things. From a portfolio and asset management perspective, I'm curious, would you be interested in doing individual real world assets like some of those properties that I mentioned to you? Or we've had a company on recently, watches.io. They tokenize luxury watches, and they've actually integrated with MetaStreet and provide loans against those watches. So another similar real world asset type thing, but it's not like structured products of diversified assets yet. Are you guys more interested in those type of products, or would you be interested in investing in individual real estate products or watches?
Yeah, I can turn it over to Mark, as he really is the person who's in charge of our portfolio with Advantage Blockchain. But just quickly on the subject of assets, in the real world, I think we're definitely interested. I think it's something that we're starting to see more, and obviously it has a lot of momentum, specific institutions and players that are looking to get involved in the blockchain and digital asset space. I think that watches would be an interesting use case. I think it's something that we'd want to start small with. I think that infinite banking makes a lot of sense for what we're doing with whole life. I think just using assets and trying to develop the strategy of borrowing against it to invest in some of the more I'm about to say something pretty funny, but more traditional crypto assets that we're investing in, is definitely something that I think we'll begin to think about. And I think Mark said it really well. We want these assets to be investable. We want it to be easy for us to actually, take some of the cash positions we've built on chain through stable coins, and put them towards an asset that we could very traditionally underwrite. So Mark, I would actually love to hear your thoughts on this.
Oh, no, I think well said. And just to add to that, I mean, short term, I think what is most important and what could, see the most volume is essentially, are these things liquid, right? That matters to a lot of, liquid funds, right? We can only invest in things that are liquid, at least with, the current state of our fund, right? So are people able to get in and out of these assets in a, 3 month, 6 month, 1 year basis, right? Is there going to be a secondary market where these things are tradable? I think that's more important, maybe short term, right? For just high amounts of volume and sellability. I think long term, it's definitely just exciting in general, what you guys are building, because I think long term, special funds can be set up to primarily focus on this kind of concept of infinite banking that you guys are built out. I mean, I think offering it as another solution in parity with something like, a more aggressive hedge fund strategy, in the long term, I think, is going to be very attractive to a lot of people. And I think ultimately, we're in this for the long term, right? So, long term, I think the big money is probably going to follow there and be setting up a lot of their own specialized funds to handle exactly this, but on chain.
Completely agree, and very well said, Mark. With that, I would love to hear just about potentially any success stories that you guys have been tracking in the tokenization industry, even personally with the fund and the digital asset space. I saw your guys' newsletter you put out recently where you were beating the market. It was incredible. So don't know if you want to dive into that a little more potentially.
Yeah, I would say outside of trading Mr. Miggles and some memes, we've definitely had some success. I think there's going to be a lot of success on base. I think people should watch out, just watch that ecosystem as it unfolds, and understand that it is still ground level, ground layer kind of infrastructure technology, meaning that a whole world full of use cases can evolve from it, right? And that's why we are, so focused on it, is that it's not like, base is just one solution or just one application, right? No, it's the infrastructure that's going to allow for so many applications ranging from, from RWAs to gaming to science to, to the future of finance, right? I think really just following that ecosystem, one aerodrome is, like I've said, I'm not a paid agent for Aero, but I really we think it's one of the most impressive solutions that we're seeing, right? That's our job, is to, right? We have a fiduciary duty to just produce returns for our investors, and I think that fundamentally, if this platform is going to be used the most to help the entire world exchange all different kinds of assets, be it traditional cryptos or new types of RWAs and more, really watching that space. I mean, that's up. I think people are having the same realization, right? Arrow itself has traded up, I think probably, 30, actually I think it's up like 80% in the past 30 days. And it's because, I mean, of course, right, a lot of this stuff is still a gamble, but it's because there is fundamental use, and it's being led by Coinbase, which is, one of just the biggest, turning into being one of the biggest custodians in the world in this entire, asset space. But I mean, we're really just following the money and trying to essentially get ahead of it.
Yeah. And then if you look, actually, I think $600 million plus of U.S. Treasuries have already been tokenized us, which is really cool. I believe it was done by Backed Finance. So Base obviously is joining as a potential layer 2 or just blockchain to be tokenized on. So it'll be interesting to see, as Coinbase has some of these institutional relationships, how many of these tokens that are backed by real world assets will begin to actually appear on Base. A lot of the tokens that we've seen, a lot of the real world asset tokens that we've seen are actually being built on multiple chains, which is really cool. I think there will be a high level of interoperability within these assets. I think that just is what makes the most sense, especially if they're on an EVM layer 2, which just means that they're compatible with any other Ethereum-based chain, as Base is built on top of Ethereum. More specifically, it's built on top of Optimism, which is built on top of Ethereum. But it's very exciting to see what's going to be happening in the real world asset space. I would point towards what BlackRock is doing with something like BIDL, which is their money market fund, as a lot of other institutions are planning on launching similar things. And I think the reason to watch it is not because it's so accessible, but more as a case study of what could be. So it's only available to qualified purchasers. It's only available to the highest. Essentially, a qualified purchaser through BlackRock would be one of their clients who has, I want to say, $5 million in liquid assets. I believe that's the threshold for qualified purchasers. But what it will show is a couple things. One, how are these investors, or what are these investors doing with their dividends and funds that they're receiving? So these, the dividends that will be given from the BIDL funds are going to be given in USDC, which is a stable coin built by Circle, tied to the US dollar. This is going to be given to these investors on chain, where they'll have a choice. That will they cash it out and bring it back into the traditional world? Will they leave it on chain to invest in other real world assets, or will they leave it on chain just in other crypto assets? Right there, there's a pretty good chance, if it's left on chain, that money will continue to flow into digital asset, which is really positive for the entire ecosystem. So it's very exciting, and I think it will pave the way for what a lot of these other assets can do. Obviously, the more accessible assets will not be done through BlackRock. They'll be done through some of the other platforms that we're seeing that are being built, whether in a centralized or decentralized way. So I think it's all really positive, and can't wait to see what 2025 looks like, because we've made so much progress. And Jackson can attest to this, Mark can attest to this. But we've been in the real world asset space for a while. I've personally been in the real world asset space since around 2018, 2019. And it's been a slow build, and it's been, kind of waiting for this point of liquidity. We're waiting for trading. Liquidity has gone from trading to collateralized lending and borrowing, which is awesome. I think that's a much better form of liquidity and much achievable, as proven. I think that we've just made a lot of progress in these past 5-6 years. And just, I think that the progress will actually look exponential, where at first it was a very slow build, like anything, on an adoption curve, where, it takes time. The infra needs to be built. The players need to come. The players need to be educated. They need to understand why it's actually beneficial for them. And I think that, we've gotten a lot of validity and a lot of credibility with the institutions that have come into the space. I mentioned Visa. Visa is building a tokenization, or they're building tokenization rails for institutions. The bank in Spain, BBVA, is going to be their first test run for those rails. You see PayPal getting involved in the tokenization space. You see, Wisdom Tree was the big announced week, where this $100 billion asset manager is building a tokenization platform. So sorry to go on this huge rant, but I think it's very impressive. I think it's very impressive of what's been built in the past few years, and just think that it's going to absolutely take off as we learn more with these test cases and case studies.
I completely agree, and I could not have put that any better. And thank you for diving deep on that, Alec. Really appreciate all that insight there. Honestly, I'd love if you guys, we talked a lot about the Ethereum ecosystem and now the Base ecosystem as well. And I think that we might have talked about this a little on the last space, but for any new listeners, it's really helpful to understand how these layer twos interplay with their underlying layer ones and how that actually benefits or potentially hurts the overarching layer one. And so to get your guys' opinion on how Base and Ethereum work together, help each other or potentially each other would be great.
Yeah, I don't think it hurts much at all. I think it helps in a very large way, and I think that it's evolving, right? I mean, I think it's, if you imagine a layer two as just a side pocket of where the capital moves, I think something interesting, maybe why people could say that it is hurting, is the value capture, right? The value capture is going to change over time. I think we may get to a time where if you're just starting, at zero, right? Ethereum mainnet to send something costs a couple bucks if you want to send Ethereum. To make a swap may cost $30 to $50, or to interact with a smart contract that may cost $30 to $50 per contract, right? Versus on a layer two, you just take those costs. It's the same exact functionality, right? But you take those costs and probably divide them by like 100, right? So it's costing pennies to send things and a couple more pennies to swap and interact with contracts, right? I think what that's going to, the drawback is, slight security concerns in the sense that, it is a less, I'm trying to think how I can phrase this. I mean, it's not so much less secure, but it's just a different kind of more centralized pocket of the ecosystem, right? So it's not as decentralized as, the mainnet of Ethereum. But ultimately, I think we're going to start seeing like a lot of capital move into these different layers, right? So maybe there will be a point where there's, we look at the metric a lot of total value locked, TVL. Maybe at one day there will be more TVL on Base or on a layer two than there actually is on Ethereum, because more people are now just typically using Ethereum, the mainnet, for closer to the Bitcoin use case, which is just that store of value and maybe for simple sends. But then all of the actual development and infrastructure has migrated to the L2. So, that could be very interesting to see. But, I definitely don't think that it's really negative in any way. I mean, unless that threshold kind of hit where, 51% or more of the capital on the entire chain were to go into a layer two, and then, the network would be susceptible to a 51% attack. I think we're a long ways away from that. And once that were to happen, it would be a pretty, these developers are very innovative. And I think it's not just the developers, it's the entire, right? Everyone in a way has a vote, and it's the collective mind of the whole network of how they want to address that. So I'm bullish.
Yeah. And also I would add that layer twos are the scaling solution for Ethereum. So this kind of proves the effectiveness of Ethereum, all the infrastructure
right
there. It is, the developers want to keep building on it. So they could have easily gone to Solana or some of the other smart contracts, app store type platforms and blockchains that are out there. But instead, they wanted to focus on the Ethereum and continue to building out. So they use layer twos as the scaling solution, Base obviously being one of them, and the fastest growing one, I would add.
Right. It's a similar evolution to say, the internet, just the raw internet versus, HTML or JavaScript being added on top, right? Information can move faster between the wires, or video and audio can be played more efficiently, on top of the Base protocol.
100%. And I really agree with you guys. We had talked about how basically, in order to interact with the layer twos, a lot of the time you have to interact with the Base layer to begin with. And so it really does end up promoting the Base layer as well as the underlying layer two. So really thank you guys for sharing your opinions there. And as we're coming up behind here, I really appreciate all of the listeners for being here. And Alec and Mark, thank you so much for joining us. If the listeners want to stay in contact with you and stay up to date with the latest at Advantage Blockchain, what's going to be the best way to do that?
Yes, I would say start with our website, advantageblockchain.com. It's really great. Mark has put a tremendous amount of effort into it. So we're really proud of it. I would also say our YouTube, we actually do a show that we try to release every 2 weeks. And that is really around research, and we're seeing in the market really good, really good information, but also commentary from our research team, where 70 to 80% of our company is dedicated to research. And then I would also direct you towards the written research that we're putting out, which is our AB Fund Stack. And actually, Mark, what do you know the exact?
Yep, it's abfund.substack.
AB, easy, perfect. abfunds.substack. So those are the 3 things I would push towards, Mark. I don't know if you have anything else, maybe.
No, yeah, I mean, follow us on X and follow us on Warpcast. Is where we're constantly publishing research on a more daily basis. So really appreciate you guys having us on.
Perfect. And obviously, I'm super accessible. If you want to DM me, I'm on LinkedIn. You can find me pretty easily, and I'm very accessible. So,
and we're gonna keep spreading the narrative that infineo is bringing infinite banking on chain, because I think genuinely,
I love it.
From someone who purchases memes, and I know I'm not alone there. The narrative is really important, and if it really is what you guys are doing, I mean, it definitely sounds cool. And I understand it's more complex once you open up the hood, but that's the goal. We want people to open up the hood and say, "Wow, this is genius." So I think that's exactly what you guys are building.
We really appreciate that, Mark. And Mark and Alec, again, thank you guys so much for being here. We're gonna have you guys again soon. It's always fun having you guys on. This has been our bi-weekly real-world asset tokenization space. We host these typically at 12 p.m. Eastern every Tuesday. We decided to have this one a little bit early, so not the next Tuesday, but the following, on October 15th, we will be on for our next space at 12 p.m. Eastern. If you want to stay in contact with Infineo until then, I highly recommend subscribing to our newsletter. You can do that by going to infineo.ai/#newsletter. Again, that's infineo.ai/#newsletter. And thanks again, Alec and Mark, Dr. Murphy, and Tony, and to all the listeners. Have a great day, everyone.
Thanks all.
Thank you, guys.
Thanks, everybody.